So, excellent. I suggest we start where still a few of our guests are arriving. For the sake of those who are punctual, a very good morning from Frankfurt. Dear guests, again, we have registrations from 12 countries and regions around the world and welcome you to our 40th Food of Thought event in cooperation with the Association of Foreign Banks in Frankfurt. A big thank you to our partner. Today, Frankfurt is again 1 hour ahead of London. Let's make the best of it. And that's what we're going to do with our session today. Ladies and gentlemen, Food for Thought will be a bit special today, as we will aim for 1.5 hours, as we have got 2 speakers and a bit of discussion amongst them before we open up for a lively discussion with you. Is Mr. Damian Hales, Climate and ESG Risk Lead for Banking, partner at Deloitte, and Mr. Jörg Eigendorf, Global Head of Sustainability at Deutsche Bank. Together, we'll discuss about a new C-suite job role in the market, the Chief Sustainability Officer. Let me first introduce Mr. Damian Hale. He has over 25 years of experience in the financial sector and leads Deloitte's credit risk management practice in the UK that incorporates climate risk as well. He's a widely published author and a regular speaker. Damian will talk about the future of the Chief Sustainability Officer in a study in conjunction with the Institute of International Finance that, by the way, will be updated in October this year. Let me now turn to Jörg Eigendorf. He joined, after a journalistic career, Deutsche Bank in 2016 as Global Head of Communications, including corporate social responsibility, brand management as well. Since then, he has strengthened the team, established it as a separate division in the realm of the CEO. His sustainability team comprises 30 staff today and is growing. Dear audience, after the presentation of both Messrs. Hales and Eigendorf, we'll have a small panel discussion amongst us for about 15 minutes. After that, we're very happy to open the discussion to the floor. So please feel free to input your questions during or after the speeches or the discussions in the Q&A section in Zoom. The video is recorded and the Deloitte PowerPoint slides for today's webinar will be published on the FMF website tomorrow. Mr. Hales, the stage is yours.
Thank you very much. First of all, can I apologize for the background here? We just had a power cut here in the UK, so I'm sitting by my front door, desperately trying to have some internet connection. So anyway, onto the report. So let me, if you go to slide 1, please. Just on the next slide. Let me first give you a brief recap on the report itself. We started, just to move on to the next slide if at all possible, please. Thank you. And next one. Yeah, perfect. So we started by conducting a global survey between July and September 2020. Based on these results, we undertook some focused fieldwork and research and one-to-one meetings with some of the survey participants. We wanted to try and understand 2 key things. The first was how are financial services firms mobilizing to address ESG issues? And the second was how is the role of the CSO changing to try and fulfill those issues and aspirations? And specifically, we look to try and answer the following 5 key questions, which I will then cover in more detail in the rest of the presentation. The first is, why do some firms have CSOs and yet others don't? So what's the sort of tipping point for moving and creating that role? What mandate or role do firms typically give to their CSO? Again, there was quite a lot of variability there. What skills and leadership attributes are needed? The fourth one was, how does the CSO fit into the wider firm's governance? And finally, how is this role likely to evolve in the future? So first question, why do some firms have a CSO and others don't? I guess what we found is that the CSO is a sort of sense maker in chief. Can you just move over to the next slide, please? So what do we find? We found that the CSO is a sense maker in chief. That's what we called it. The idea is that they're there to translate strategy into practice and bring coordination where there was chaos. And this chaos is caused by three factors. The external environment is changing faster than the inside of the organization, meaning it needs to adapt and fast. The second was that there's increased scrutiny from the external stakeholders, again with an associated increase in expectations. And finally, there's an acknowledgement that these ESG risks are now substantial enough and strategic enough that without changes to the current organizational structure, they can't be appropriately addressed. So to my mind, that was one of the biggest tipping points. It was just the environment is changing so fast, and there's a need for a CSO to help change the organization to respond to that external environment. If we move to the next slide. So on question 2, right, so some organizations now have this CSO. What's the mandate or role of the CSO? What we've found here, again, no real surprise, is it's firmly anchored to those 3 points I've just discussed as to why organizations have that CSO in the first place. The first thing is they are there to make sense of that external environment. If you look at the sort of regulatory horizon scan across the globe, there's, almost a week doesn't go past without some form of new publication on the topic. So for international organizations, that's a lot of information that has to be digested and brought back into the firm. That's one of the things that the CSO does. The next thing, as I said before, is they need to then help the organization to reconfigure, adapt its business strategy to align to that external environment. And if the external environment is always changing, then that adaptation needs to change too. And that's another key role of the CSO. And the third one, to help that change, is that they need to support the reconfiguration. They need to bring leadership. They need to align teams. They need to educate. They need to engage and connect people together. I think we had a really, really good quote from one of the actual CSOs who said that CSOs observe that they join the dots. They're linking different parts of the organization together. And since they work at so many of these intersections, they naturally have an advantage in trying to reconfigure the organization because they can see all the points of the organization and how that is moving. We move then on to slide 3. So we sort of explained what the CSO is there to do. Now we're there to say what are the skills and what are the leadership attributes that the CSO has. And we broke it down into 2. What's the technical skills and what's those leadership skills? Now, I guess with a title like Chief Sustainability Officer, it was almost the expectation was almost that the primary skill needed to be sustainability. And actually that was completely wrong. Right? The most important skills that came out was that of strategy and influencing other people. It wasn't about actually the technical skills of sustainability. It was, how do you influence people? How do you see that strategic vision to take what's coming on in the external environment and bring it into the organization and make that change? There was a little bit about risk management as well, but if you think back to the timing in 2020, there were a lot of regulatory pronouncements out there. You had the sort of PRA climate stress test, the EBA stress tests were announced, and you had a lot of conversations about how do I get ESG and sustainability into risk environment. So I guess it's not that surprising that risk also scored highly, although I'm pretty sure if you were to do that task now, influencing and strategy would still be there, but I suspect risk management would have fallen slightly. On the leadership side, there was a couple of really quite interesting things there. The first thing was that the newer CSOs typically tend to be more agitators. And I guess that following the old adage that if you're going to make an impact, you need to do it quickly, that's probably not unsurprising. But the next thing is that CSOs are typically more executors, i.e., it's not a case of trying to bang the drum and get everybody aware of the sustainability issues. It wasn't the idea of making sure that your stewardess you've got a steward such that the organization isn't going to collapse because of CSO issues. It's about actually doing something. The CSO is appointed because they're actually going to make a change. They're going to do those connections. They're going to do that education, going to reshape the organization. They've actually got to make it happen. So to my mind, that's a very, very difficult thing to ask. So I don't think the role of a CSO is particularly easy. If we move on to the next slide, please. So how do the CSOs get things done, right? And again, we talked a lot in the paper about sort of implicit power and explicit power, or the carrot and the stick in the old adage. And I keep thinking, again, one thing that comes out is that you can't just have all carrot or all stick. You need to appropriately balance it depending on what you are seeing. So the CSOs themselves have a wealth of implicit power, right? They're close to the CEO. They've got a network of contacts. We said they join all the dots. They've got that base knowledge that other parts of the organization might not have. So the implicit power they have, i.e. the carrot, is huge. They need to work and use that implicit power to support the rest of the organization. But they also have that explicit power, that stick. They've got status. Given that most organizations have pretty large ESG budgets at the moment, and that budgetary power sits with the CSO, or the influence sits with the CSO, they've also got that sort of huge amount of explicit power. They also typically sit on reward committees and have voting power on really important strategic decisions. So in order for the CSO to get things done, they've got to have that power, and they've got to use that implicit, they've got to use both the carrot and the stick to make it happen. Too much stick, and it's harder to get that collaboration, right? You've annoyed people. How are you going to work together, right? Too much of just the carrot means that sometimes they can take you for granted. You don't actually stand up for anything and make things happen. So it's really important that we find that the CSO has that appropriate balance. If we move on then on to question 4, what does CSO governance look like? And as I said before, it's a very difficult job, because when you look across the market, you realize that the CSO is involved in all of these sort of committees in a different way. So linked to their sort of, if you sort of look at it right at the start, like the sort of board responsibilities, right? They typically have some form of oversight of the ESG, risk-related ownership, ESG strategy, ESG control. So they've got a board strategic mandate. They typically will sit on the risk committee as well to provide SME assistance on risk appetite, metrics, and just generally that sort of sustainability skill set. They'll sit on an audit committee, help assisting the board in fulfilling its corporate governance responsibilities on the topic. Increasingly, we start to see them on the compensation and remuneration committee, as more and more organisations realise that they no longer need to just look at risk and reward, they also need to look at more longer-term sustainability and ESG considerations. Given that we've just said that ESG is really, sustainability is really strategic, that there's a huge amount of change happening in the organisation, they also tend to sit on the governance and nominations committee to assess around the upskilling of the whole organisation to make such a big strategic change. And then finally, typically more and more organisations are recognising that because ESG and sustainability is so strategic, that there may be some sort of other board committees that they need to sit on. We move then on to the final question, which was question 5. How's the role likely to evolve? So I want you to take you back again. Bear in mind that the report was issued in 2021. At the time, 99% of survey respondents said they believed that in the short term, it would rise in importance. Obviously, sitting here in mid-2022, it's very, very clear the role of the CSO has risen in importance. And we're still talking about the CSO and the role of it in such a fast-paced environment. In the longer term, though, a number of our survey respondents weren't quite sure. There was lots of different thoughts about whether or not the CSO would continue to get bigger, whether it moved to the CFO, whether it moved to the CEO. But overall, our survey respondents continue to believe that the CSO would be a discrete role, which I think is obviously great news for CSOs out there, that they're not going to be made redundant anytime soon. The sort of analogy goes that everybody uses data in an organization, but you still need a CDO. Everybody uses technology, you still need a CTO. So even if part of the overall DNA of an organization is around sustainability and change to external environment, you still need that CSO to sit there and coordinate it all and provide that gel across each of the organizational components. So in summary, I think the quote on the very first page perfectly sums up the role of the CSO. The CSO needs to be a conductor of the orchestra, making sure everybody's got the same objective, working with exactly the same tools, and moving at the same pace. Right? And ultimately, that to my mind, that will show you whether or not the CSO is being effective. If the organization is changing fast to adapt to the external environment, the CSO is being effective. If, however, it's not, the different organizational objectives are moving in a different direction, it's a mixed message to the market, then I think the CSO, you could say, is not acting effectively. And with that, that brings the end to my presentation. I'm looking forward to questions later.
Yeah, allow me before I pass on to Jörg, Damian, to give two questions. So, what's going to be new in the updated study in October? Is it going to be the same 5 questions, or is there anything new which you contemplate?
Yeah. So, what we've tried to do this time is make it a bit more specific on one topic area. So we've still got the same focus on asset managers versus insurers versus banks versus real estate companies. But what we're trying to do is to say, as a CSO, given what one of the big objectives at the moment is how do you meet your net zero obligations, we want you to try and make it real. What does actually being a CSO mean in that sort of context? How do you join all the dots? How do you take very sort of grandiose statements that are way out into the future and bring it back into the organization to short-term metrics that apply to finance, to risk, to the front office, to change? We're trying to really show what it's like on a day-to-day basis to be a CSO. And obviously we're really lucky that we're going to hear from one, and hopefully the message that we get out in our report will resonate with what it's actually like to be a CSO on a daily basis.
Yeah, that's going to be an interesting part. One last question, Damian. You also have a question, will it migrate to the CFO? I've had lately quite a few discussions on the subject, how much closer the CSO and the CFO needs to work to really align fully. What do you think about that? Any insights from your study here?
I mean, if you go back to that original premise around joining the dots and being an influencer, then by definition, the CSO needs to have a really close working relationship with the rest of the C-suite, not just the CFO, but the rest of the C-suite. You know, if one or two of those links are broken, then how do you go back to that sort of orchestra analogy? How do you ensure that the whole band and orchestra is playing the right tune? So that's point one. Point two, though, I think the CFO is really even more important. And going back to this idea around net zero, is because typically what the CFO is there to do is there sort of, you know, that check and balance to say, let me report to you what the risk of the organization is, what the reward of the organization, and trying to make sure we get that right balance. Given that we're now sort of talking about carbon budgets and net zero, it's quite likely that the finance function are the ones who are going to be there to say, not only am I checking pounds, dollars, pence, euros, I'm actually going to be checking what is the actual carbon budget associated to every activity, to every deal, and report that back on portfolio, legal entity, etc. Now, that means that the organization going forward has suddenly got an even more complicated optimization problem. Not just risk and reward, it's risk, reward, and carbon. Do I do one deal that takes a lot of carbon, gives me a good reward, and then the rest of the business therefore can't function? And typically that's what the finance function does, right? It reports those metrics back to the organization, helps set the strategic vision, the budget, so that the organization can do that optimization. And that's where I think that CSO and CFO link is so important. Do I think that the CSO will be made redundant and it will just move to the CFO? No, for all those other reasons that I talked about, that sort of network role.
Yeah, it's interesting to hear from somebody who comes from risk management, and obviously we're talking about a non-financial risk management topic amongst many others here as well. But let's now turn to Jörg Eigendorf, sense maker in chief. I mean, isn't that a great title? Moving from strategy to practice, being an agitator, being an executor, having carrots, having sticks, being on awards and audit committees. Is that how reality looks like, Jörg?
Thank you, Damian. Thank you, Hubertus, first for the introduction. I think it was a great presentation, and welcome everybody out there. I think this survey covers a lot of very important points. And probably there's not a single chief sustainability officer out there who fits completely in everything, because as this survey shows, it really depends on your organization, and it depends on the governance and the goals and the execution power you have at the end, how you are plugged in, where you are in the organization. I would like to give you a very short update with the presentation I brought, and very interesting things. Just to stay here for 1 second with how different it is. For example, Damian said it's a CFO. Yes, it is a CFO, very important. And I have to say, in sustainability, we in Deutsche Bank with Gerald Podobnik, who is the CFO of the corporate bank, but effectively he's also the CFO for sustainability and my CFO eventually in helping and supporting all these efforts and steering it. But it's as important to be plugged in with risk. I mean, risk, the whole carbon issue is with risk. And again, then it has huge impact on businesses, but I will talk about it later, and eventually in the performance management. So you always have, the way your organization is structured will make it important for you to set up your own governance as Chief Sustainability Officer, and that can differ very much from organization to organization. Just a quick overview here. I brought, many of you may know it already, when we think about sustainability in Deutsche Bank, we think in 4 different pillars. Please go to slide 1. First slide. You can see that, and that shows the whole, I see nothing right now on my screen, but hopefully you see it. If not, then I explain what you should see. It is really about the 4 pillars we have. Pillar 1 is sustainable finance. That's really the business, everything we are doing, the business we are doing in our 4 business areas. And we have this 200 billion target, which we will achieve this year, and then 100 billion each year from next year on. That's always sustainable finance. Policies and commitments, that is very important. While sustainable finance is really what we do, policies and commitments also frame what we can do and what we should not do. It's on the one hand, what is E, S, and G, and on the other hand is what we shouldn't do. For example, if deals in the oil and gas sector, if we make due diligences and eventually decide against transactions. This all is in this pillar. Then we have our people and own operations. Very important. Under this comes everything we do for ourselves, our own carbon footprint, but the whole governance I would put into this box, because I will talk about the governance later. It's very important to develop a very effective governance. And then you have this thought leadership and stakeholder engagement, also very important. As a chief sustainability or as a sustainability function, you need to be, and as chief sustainability officer, you need to be permanently in the dialogue. But not only you need to create. Eventually, what we need is a group of ambassadors, because you need a lot of subject matter experts, and you should not think that anybody out there, because there's so many demands on that role, that anybody out there knows it all. I just listed for me the functions you could think of. It's regulatory affairs, it's financing, accounting, it's the business knowledge, it's the risk knowledge, subject matter expert. You can dig deep into biodiversity and all of these things, and then you need to have all these soft skills. So how do we? If we go to the next slide 2, you can see what the sustainability function does. And I very much like this chart with agitator, steward, with facilitator, and there was another one. The 4th was executor. And I think all of these are very important. I wrote here above this slide, and knowing the study of Damian and Deloitte, I really thought the facilitator, and I could have put also executor role. These are the 2 most important roles here. Why? Because the one thing, you have to make things possible. And on this chart, you can see all the interactions and spheres within your company with which you have to be plugged in. You need to make things possible. You get a problem, like let's say CO2 emission, and we need to get to net zero. How do we manage that down? That's a problem. Then you have to think about who in the company has the ownership for this, could run this, who also needs to be plugged in, who needs to be in the decision-making process. So you got to bring the people together. That is why a soft skill for the chief sustainability officer or the head of sustainability is so important. You need to be able, you need to know the company, you need to know where the people sit, you need to be able to approach them, and often in very siloed environments. You may have people not used to work across businesses with each other. And we are very proud in Deutsche Bank now how well businesses, and I will come to one of those work streams where how we manage sustainability in Deutsche Bank and how they're all working together. And this is really fascinating to see. I described here the sustainability function and what it all has to do. And you have to think about there are two, we have a sustainability function with two parts. So one is really the run the bank sustainability function, group sustainability, which is doing everything from the policy writing frameworks, the stakeholder engagement with rating agencies, the whole deal validation and due diligences. It's really also a center of intelligence and scanning the landscape and what do we have to keep in mind. So that's the one, this is doing what we really need to do on a day-to-day basis. And then we have here in my sustainability department a strategy and PMO department part, an execution part. That is a project management office, and a strategy is very small, and the project management office effectively is breathing, because what is lacking always when you look into companies, when it becomes cross-divisional, everybody is always saying, yeah, we need to do this, but we don't have the resources to do it. And eventually you need somebody who manages a project from front to back. And this is a deficit we try to eliminate here. So there are many projects and work streams, and I'm coming to them afterwards. We need to run it. We run them centrally via sustainability. And this is why I think it's a facilitator and the executor, which are so important. What you also need is, and Damian has pointed it out already, that I saw this shocking list of committees you would have to sit in. I'm not, hopefully I will never have to sit in all of these committees. We have created our own governance, which is very sustainability focused. Because if you sit in committees, if you sit in enumeration committees, you will spend of 1 hour, you spend 50 minutes talking about all kinds of stuff, which may not be so relevant for you, but then 10 minutes you need to be there. So what we have created is, and this has evolved over the last 3 years since we have announced sustainability first as a management priority, and now it's really in the center of the strategy of Deutsche Bank, as we announced at the investor deep dive in March of this year. But this has developed. We started out, and you go to the lower end of the page, with the Sustainability Council at the beginning. That was already in 2018, before we even made it a management priority. But then we had a council of roughly 50 people who were always engaged, but that was not a decision-making committee. We thought we really need a decision-making body, and we created the Management Board Committee Sustainability, where you mainly have management board members, group management committee members, and certain experts, like CFO infrastructure parts needs to be somebody from CFO, that's Gerald Podobnik in my case, risk is Chris Jakes. It doesn't always have to be the board member. And we have to be very clear, you need to have specialists you work with, and you cannot always go through board members. That should be the exception. What you usually have is MB-1, you have the one real expert, like in risk, it's Chris Jakes, with whom I work closely together, and his team, which is absolutely focused on getting carbon integrated in our decision-making processes. So we then, I started with the council, which is rather information sharing, best practice. Then you go to the top, where you have the committee, the decision-making body. And at the beginning, this was also the steerco for the so-called key deliverable. It becomes very technical now. We are in a bank. And we found out that there is not enough time to talk strategically in the committee. We need to get all this day-to-day management, which needs to be documented for the regulators, because eventually everything we do, we need to be able to explain to regulators. Maybe in 2 years' time, we need to explain why we've made this decision. I just had an audit, by the way, on sustainability, and luckily I had it now, because you really then get a feeling for how much documentation is needed. And we have created the steerco now, which will do the day-to-day management of it. And I'm running the steerco, and we have the data and technology operating committee, which effectively reports into the steerco, and data and technology is highly important. We have these 8 dedicated work streams below, as I said. One of them, and you can go to next page, to the page 4, you can see what the priorities are for, we call it Sustainability Strategy 2.0. 1.0 was the targets we made, getting the company set up, creating a lot of energy, starting with really focusing on controls, and implementing and seeing that the things we are doing, that they get started and developed in the right way. Sorry, I have a small fruit fly in here. But you can see now in 2.0, it's really about how do we get to the next stage in our volume with our business, and then the most important, net zero and transition dialogue. How do we get our clients to transform into carbon net zero companies? As only if our clients are carbon net zero, we will become net zero. At the beginning, these were 2 work streams, and this was, for example, one of those things. We had risk really focusing on net zero. We had business focusing on transition dialogue. But then think about it. If you, and Damian said it, if you put carbon into the decision-making process next to the liquidity of the capital of a client, the business plan, the profit projection, suddenly carbon comes in. And I can tell you, we have all the data now. We know who our biggest emitters are. Then you look at it, how much revenues are we doing with these emitters? And then you suddenly see there's no correlation of that. So how do we get it correlated? What will this eventually mean on our revenues? So that means you got to get our performance planning, performance management into it, because you open up plans. It's getting very complex, and then you decide to bring them all together in one room and drives this effort. Governance and controls, extremely important. We have a very strong group sustainability function. Victoria Brand, who runs it. These are experts in everything that with regards to taxonomy, deal validation, dialogue with rating agencies, as I said before, data and reporting. I cannot overemphasize this. Is probably the most important area eventually, because without a good data backbone, we will lose. Those banks that have the best data platform will be best capable to scale the business and make their client-facing people also meeting the demands of clients. And you need the empowerment of people. Just a final slide which shows you, and we said before, and Damian, I can only encourage you, take that carbon issue, because it's so complex. Probably there's nothing else where there's no area where you can better explain what a CSO eventually has to do, and that it can never be a lonely wolf in a company. You always need so many people to get them engaged. And again, if you think you're the greatest and you are the one standing for sustainability, there's so many faces in our company and ambassadors who drives this effort. And I wouldn't move a step forward if they didn't move forward, because you need to have the people on your side. That means and you got to tear down silos. This is extremely interesting here. We have 30.8 million tons of CO2 equivalent we financed last year. Eventually, or we at the end of last year, if you it's a very complex calculation. And there are still some flaws in these numbers, because all the banks have just started. It's PCAF material. The interesting thing is here, if you look at it, it's 1% of this group of 25,000 clients. We have many more corporate clients, but we just took the biggest 25,000. You come to 1% who make up 70% of the carbon footprint that are the top emitters, which means eventually you need to look at each of these client relationships. You need to talk to your coverage people. You need to understand, is the data right? Are we on the right track? What have these companies in place? How do they have commitments? How do they live up to their commitments? So you feel already that this is a huge task. You cannot do with the Department of 20, 30, 50 people or 100 people. You really need to empower the company, and you need those people being on your side, supporting these efforts. And this is the fascinating thing I have to say. We are now probably at, I would say, more than 100 people in our bank in senior positions driving these efforts day by day, which is a huge number across all divisions, across all infrastructure units. So, and group sustainability and the sustainability function is there to drive it, to drive the strategic, to drive the strategy, develop it further. And one thing, Damian, I think you also made it in your presentation. You need to understand right at the beginning things coming in, because you need to translate the outside world into the inside. The sustainability function needs to understand what is necessary, and don't overestimate it. Just realizing that something is necessary doesn't mean it gets done. Just take the German Supply Chain Act. Huge thing. What does it mean for a company like Deutsche Bank? You really need to set up a work stream. This is pure project management. You go through lists, who is doing what until when. These are sometimes can be very, very boring meetings when you go through a list with 25 to-dos and you check on everybody. Are the people delivering and doing? Are they on time? And so this is why I say the execution element of it is highly important. With that, I think you can touch many points here. Leave it with that. I'm really looking forward to the discussion. Over to you, Hubertus.
Excellent, Jörg. Very, very insightful, very exciting. Allow me 2 questions to you before we open the discussion with Damian. Transition dialogue. That's really close to business. Is that something which you think is unique to banks, that they or is it also something with finance industry, asset manager, insurance, that you go with your clients and have this transition dialogue, or do you think that is something also for a wider industry?
First of all, I think we all need to transition. So we are affected by this in some point. If you're not a bank, we as a bank have to think, what does a client need? If you look at those couple hundred of clients who are the biggest emitters, let's start. If you have that concentration in carbon footprint, then let's start there. I can talk to every Mittelstand company in Germany, but at the end, it won't move the needle that much if I don't go for these, and we need to manage carbon emissions down. So we as a bank have to think about the client. What does the client need? And the client needs investments, the client needs guidance, supply chain management, for example. Our corporate bank is deeply in supply chain management, financing. And we just announced deals like this, I can talk about because the company agrees to, with Henkel, supporting in the supply chain efforts. And there are a lot of things in there that goes from supply chain management over financing of projects, over what does the capital market think about these efforts. Many companies are struggling because they get pressure from investors. We can translate that. We can find investors. We can do smart deals for the companies. So that's one side. If you're on the other end, you have to ask yourself, what outside expertise do I need to do this dialogue? How do I facilitate what will be my needs? Where am I on this?
What am I bringing to the
carbon
table?
to net zero? And I can only tell nobody should think that this will go away. This will become harder and harder and harder. And the longer we wait with our efforts, the more drastic it will become in the next couple of years. Let's face it, if we want to go for 1.5%, it's probably rather 3 than 8 years time we have. We need to halve the carbon footprint radically very, very soon, hopefully until 2030, which is a huge effort. If we wait for longer and longer, if we lose the next 3 years, I promise you that we will face situations that companies will have to do more and more and more radical steps. So get prepared now. What we see worldwide now, and we see the war in Ukraine, which is a nightmare, a terrible nightmare, but ecological catastrophes have warlike implications, and we see it all over the world. And if you and sometimes it's this small news, like yesterday, if you watch news shows, you have you have hurricanes, or you have floods in Austria, and a couple hundred kilometers on south in Italy, you suddenly have droughts, and to an extent we have never seen. So get ready for this now. So everybody needs to think about, how do I get ready? We as a bank, we are measured by our scope 3 emissions, while others are measured by scope 1 or scope 2. And if you're measured by scope 3, you must get in the dialogue with your clients, because otherwise we will never achieve it.
You never. So thanks very much for that very passionate and timely pledge. A question: the way you described your work was very much project management oriented. To what extent do you think it will remain like a project to be managed, or to what extent are you able? And you mentioned the number that you sort of influence or have more than 3 times your own staff within the organization looking after sustainability issues. How can you implement it in the organization in a sort of first and second line sustainability thinking? Is that something you think along those lines, or is it theory?
Yeah. All the time. First of all, there are many more people in Deutsche Bank than those more than 100 who are day to day in senior positions managing it, because they're managing people. So you get in the thousands who are doing something. Just give you one example. If you look at these work streams, and I pointed out you saw the data and technology part of it. There right now, our technology, data and innovation department, it has allocated more than 100 people to this full time. Yeah, so they are programming right now our data platform. So this is, you have a lot of, you mobilize the company, sometimes here, sometimes there. It's not one project. It's right now 8 work streams. I had 23 last year, but because we wanted to do it very broad. Then you need to get more focused, because you need to document everything. These are very strong. This project management office needs to document all the things. So I think, to be honest, this will rather grow for quite some time. What will grow in sustainability, the central sustainability function? On the one hand, everything was policy writing, framework writing. We have great experts, but they just don't have enough time anymore and resources to write everything we need to write. Give you one example. We cannot wait, as we do transition dialogue, we cannot wait for the EU coming up with a transition framework. Then we will wait for another 2 years. So we need to do our own transition framework and adapt it afterwards to what the regulators or the EU Commission tells us to do. So you need to work really hard on this policy writing. Deal validation needs to grow. On the other end, because we have more and more deals, so we need to validate them. Risk management is not part of a sustainability function. Then you walk on the other side. The dialogue with stakeholders needs to be increased. Rating agencies right now has signed off until 11 o'clock yesterday night the CDP filing of Deutsche Bank. It's 359 pages. It's unbelievable. Now think about, we have 8 or 9 rating agencies. We get these things each time, a huge amount of work. We have to think about how we deal with that, because otherwise we will work forever on these kind of things and cannot do the other work.
But so isn't the essence lost in so many pages? Isn't the complexity as such getting unmanageable?
No, it's getting manageable. You have to always, and that's exactly the thing. You need to focus eventually. I think eventually we will publish these filings to the major rating agencies, and everybody else can then look at them and serve themselves. Yes, it's a lot of tick the boxes, and rating agencies haven't found their approach yet, I think, but that will evolve very, very quickly. You see a lot of the dialogue is changing every year. So we need to invest also in this dialogue. But next to that, you need to think permanently, what is coming in? How is the outside world changing? How do we project management that eventually? And that is a lot of time, because we realize we need a good data platform. Yeah, let's do it. And everybody who has ever created a data platform knows how much time that takes and how much nitty-gritty work that takes.
Fantastic. Let's open the discussion also to Damian and get together. And Damian, I'd like to kick it off after what you've heard. Given this complexity, given these various aspects of the role of a CSO, how would you define the KPIs of a CSO?
I think there's two things you need to start with, which and I think you'll did a brilliant job at the start to say that the role of the CSO is very, very different in every single organization, because every organization has a different strategy and different power bases, if you like, and different activities and different functions. So with that first premise, the actual KPIs, I think, obviously need to be tailored to what changes need to happen in each individual organization. But the second thing that I think, and that's more important, and I try to touch on that in my presentation, was that the effectiveness of the CSO should be measured by how well is the organization actually adapting to the external environment. Is it moving swiftly? Is it ahead of the regulations? Is it ahead of this whole trend that we see?
But how do you put that in a KPI, Damian?
Well, I mean, it's absolutely right, it's so challenging. And that's why we said that the role of a CSO is that sort of network and that adaptability. It's having to step back to say, in order to meet net zero, I've got to go and engage with the finance function. I've got to engage with data. I've got to engage with the front office to get here. And what I need to be successful is I need metrics around how many of my customers have I contacted, that I have a carbon adaptability plan, and I've risk assessed. Excellent. Point one on that journey. I've then got a way of gathering all that information. So I've got to have a nice report, KPIs around the reporting of that. I've got to then compare that against an overall risk appetite. So actually the KPIs are different for each of the functions, and the CSO's got to help there to make sure that all those little bits along the journey mean that at the end, the organization is facing the right way and going at full pelt. And that's really challenging, which is why there's no one size fits all.
Yeah, that's pretty much also what Jörg said. Jörg, sorry, you want to chip in?
Yeah, Hubertus, and Damian is absolutely right. If I look at my KPIs, it's called key deliverable. It's management. When you have 8 work streams, every work stream has a charter. Every work stream has objectives. Each time, if an objective isn't met, the work stream turns amber or red. If it turns amber or red, I get in trouble, because the senior management is linked also to all these KPIs. I would say one KPI, a chief sustainability officer, should be the most important. That is the control side. That is, look, we are the safeguards of that everything we do is credible. There it comes, the communication aspect is extremely important. So we need to be sure when we report on something, when we say we have 177 billion financed in financing, facilitated in financing and investment, then it must be 177 billion. We must be able to explain what it is and what stands behind there. So the first is we cannot drop on the regulatory and the control side. And this is vitally important. And then comes, a lot of that is, I would define sticks and carrot a little bit, and Damian and I have discussed that already, a little bit different. That is really the stick side. Yeah, you need to be careful that deals aren't done that are against your policies. Yesterday I had to say no twice. I just said no. I mean, and this will cause trouble. And by the way, that's also a feature for the chief sustainability officer. You won't be popular often, yeah, because you sometimes have to say radically no. And that may mean even a couple of days before everything should start, and you are the most hated person in the room. So that is really the prerequisite for all that. Is the backbone, and this is extremely important right now as business is growing so quickly. So you need to catch up. And I think that's something that in former times in Deutsche Bank we really learned our lessons on other sides like KYC and so on. You need to grow the control side even faster than the business, and sometimes at the beginning, in order to be able to scale the business and not making mistakes there. So and these are KPIs. If something goes wrong, if you get an audit or whatever, and things go wrong, that's very measurable, because you have certain things. You have to remediate these things, and when you remediate them, you can see if they're right or wrong. So I would say KPI number 1 is really control, and that's on that angle that must go. And then it's really it's easy with me because you look in every work stream. Are we on track on net zero? Are we on track on transition dialogue? And by the way, I'm dependent very heavily, and rightly so, on my colleagues in business, in risk, in finance to facilitate it. I will be amber or red. And that's the point. That's really my thinking is sometimes, oh, there is this department or that department. They have the responsibility. I'm told that sometimes. I say, yeah, you know who will sit on the spot afterwards? If it goes wrong, it's me. I will be told this is amber, this is red. And I cannot say, yeah, but it's his responsibility, her responsibility, not mine. It doesn't work. So you're absolutely forced to work together with the people. And by the way, that's why I think sustainability is the best way to get client focused and cross-divisional for a bank. It's the effort that makes it possible. It's just because you have to work together. Otherwise, you will just fail.
Yeah, the complexity.
Sorry, just to add one little point to what Jörg said. Obviously, there's 8 major projects within Deutsche Bank. But next organization, they may have 10. Next organization may have 7. And there may be overlap, but I guarantee that every single one of those projects will be structured in a different way with potential different responsibilities, different actions, different milestones. And that's why that role of the CSO is so complicated, because you can't just sort of pick up a CSO from one organization, drop it in the next one and expect them to be successful, because they need to adapt. They need to understand what's going on. And as I said, influence it. So the KPIs that actually happen in each different organization will be subtly different.
Yeah.
Mm-hmm. Yeah. We've got one question from the audience, which I think is a very interesting question. To what extent do you gentlemen believe that distributed ledger technology is helping to document the very complex process by doing smart contracts, by a good way to have such a distributed ledger platform to manage these complexity? Is that something you have any experience with? Are you trying, or are you looking into it?
I'll go first to say, yeah. I think the idea behind it makes a lot of sense, because the challenge we've talked about in terms of sort of net zero is understanding all of your scope 3. So all of your financed emissions, and think about your supply chain, you want the full supply chain. The idea, therefore, about distributed ledger, blockchain that shows you that full history is very, very, very appealing, right? The challenge is that going to solve the problem in the short term in order to meet my short-term net zero obligations? And the question is probably not. So it feels like it's something that everybody should be considering. It's great that it's aspirational, but I do think that unfortunately it's probably not going to solve the problem anytime soon. My personal view.
I couldn't agree more. If you look right now, if you want to have an end-to-end reporting system, if you want to have the carbon, let's say this whole carbon management issue, and plug it into your company, you can't buy it from the shelf. We are programming parts of it. And I tell you, I'm absolutely skeptical of programming something yourself. If you can buy something from the shelf, buy it from the shelf. Don't reinvent the wheel. Unfortunately, there needs to be some invention here. And if I think that would probably put more complexity on it, I hope our data and technology experts understand very well in that moment when they need to use ledger technology, and where it may be a shortcut and where we can leapfrog into that and solve a problem. But there is a lot of basic work for everybody to do out there on the technology and data side.
Yeah. Jörg, let's look at it from a strategic, from a branding point of view as well. The narrative of a company becoming sustainable, is that something which is a differentiating factor? Is that something which can be communicated? And if yes, how? You've been very, very open discussion. Give you an example with Fridays for Future. Just recently, Ms. Neubauer and she gave a press conference in front of the Twin Towers after that as a little thank you. And the question is here: to what extent actually is such a complex undertaking communicatable? To what extent can you have a narrative that is at the end of the day helping the organization?
I think it is absolutely possible to communicate, but you have to be extremely careful. And you have to be, and here comes back the role of the Chief Sustainability Officer, that needs to think about what can I really deliver. And by the way, the dialogue with Luisa Neubauer, I would have liked not to have the press conference afterwards, but she said some nice things about the dialogue we had, and we kept it confidential. We agreed on confidentiality, but she at least said we entered into a very good dialogue afterwards on the media conference, which was very unusual. I think you need to be in the dialogue. And I think we call our strategy from ambition to impact. And we are beyond the ambition state now. And ambition don't change the world. Effectively, we got to get it into the company, and we need to think about when we say we will be net zero by 2050, and we will announce our carbon, our pathway for the most intense sectors in the fourth quarter of this year. Then we need to be able to deliver on that. And I can tell you, in the past, it was, look, everybody signed, oh, we signed the Paris Pledge. Fine. Today, when I go to the committee and say, I want you to sign this forest pledge here, the answer is, okay, Jörg, what does it mean for our plans? Have you calculated it through? So I should not even go there without having an answer. This will cost us that much business. And by the way, we have these 55 clients who might be affected by this, and we would need to get into the dialogue with these clients. So you have to think these things completely different, through completely differently. But can you communicate it? Yes, you need to be very careful. You need to think about what can I deliver? What can we as a company deliver? You mustn't fall into the trap of wishful thinking. And you have to also look with your clients, when they tell you our target 2030 is we halve our carbon footprint, then you say, how will you achieve that? And what are your investment projects on the other side? Does this match together? You need to be the credibility, and we have seen that in the past, and we have our DWS is our asset management daughter, which is a publicly quoted company with their own sustainability function, with their own reporting and guidelines. But you can see that only allegations, and even if it's not proven or anything, can hurt you incredibly. So you really need to be very, very careful, cognizant. And I'm feeling more and more like a risk manager in my job, I have to say. And maybe that is what we've facilitator, executor, while really you learned deep risk thinking in that function. And you always ask yourself, if I do this, what might happen then? And do I have that risk appetite? The word risk appetite, I'm myself talk about it 5 or 6, 10 times a day, and I'm hearing it 20 times a day. It's always a question, what is our risk appetite? And there you need to be very clear. So you can communicate it. That's
an interesting question, but how do you define the risk appetite on sustainability reputation?
Oh, very clearly. I mean, you have to ask yourself, if I come out with a policy, are we holding up for that? And when our risk appetite, my risk appetite to fail on certain things is 0, what does that mean? I mean, then you have to ask yourself, are my processes right? If my risk appetite is 0, how big is my chance of failure? And then you need to get the specialist into the room. You need to really say, well, is the process right? Is this working well? And on communication, my risk appetite is it's 0 to fail in that field. And the interesting thing, by the way, and as that is a second hat I have on in this communicator role. The interesting thing is, as a global head of communications or chief communicator, you better. Most people think, oh, if it's then you want to make things look nice. The opposite is the case. You better think it through, that you don't tarnish your reputation, and be very careful in what you communicate. And by the way, we have been careful. We have been careful as Deutsche Bank. We've been very careful, and a lot of things we haven't communicated. We're not even communicating right now. We are working on them. We try to getting them ready. And then once you get them ready, you have a better feeling for how big the risk is when I communicate something not to be able to live up to it.
Damian.
I was going to say, one of the things that, going right back to that first question around why do organizations have a CSO, I think if you were to look back sort of 5 years, there were lots of organizations making these pledges because they thought it was the right thing to do, but not actually recognizing what that actually meant to the business and could they adhere to it. So just by the fact that you have a CSO there who's actually, before you make a pledge, going around the organization saying, what does this mean? It's a huge, huge step forward. It sounds so basic, but realistically, there were organizations making these wild pledges with no way of actually ever ensuring that they could comply with it. And going back to this whole risk and risk appetite conversation, I mean, how can you make a pledge that you're explicitly going to fail against? That's a very odd risk appetite. So again, I understand why the CSO has to have risk as a core sort of part of their DNA, because they've got to always be thinking, what does this mean? Can I adhere to it? How do I ensure that the rest of the organization, if you don't have a lot of resources, we keep talking about this, the CSO doesn't exactly have a lot of resources itself. It's relying on the rest of the business. So how do I get comfortable that the control frameworks everywhere else work so that Jörg isn't on the spotlight when something goes wrong? I mean,
but aren't those things in flux? I mean, just look at the invasion in the Ukraine. The way we suddenly have, even in a place like Germany, a majority of the population for extending nuclear energy. If you suddenly look at defense industry from a completely different angle, isn't there always the danger that you too much go with the fashion of the day rather than building a sustainable business in the original sense of the word?
Yeah, I think, Hubertus, you're not in a bubble. You are in a society, and to be honest, I'm glad that Germany has changed. And I lived in Russia in the 90s for 6 years, and I was in the eastern Ukraine when the war started in 2014. In Donetsk in the days when the war started, and because we forget that the war started 8 years ago. And I can tell you, I'm very glad that finally Germany has understood that they have to have a different approach to defense. So that means we also may have to look into our policies and have to think about and how do we find ways? Can we exclude defense? What does the EU Commission say when it comes down to ESG? So there's a lot in flux. Yes, there is a lot in flux. And by the way, in that function, you will be a lot in flux because your regulators, the politicians, everybody will react on that. There will be new laws, new regulation coming up. If you say, oh, we make it now very, this is science, and now we put science into place, reality will walk over you maybe at the end because the world has changed completely and regulation has changed completely and the demands have changed completely. I think, to be honest, it will become much tougher in the next couple of years. And if you write here, companies who have not achieved sustainability officer, I know I talk my own book here now, they have an issue. They will have an issue because they're blind, as Damian just said. How on earth? I can tell you, our culture now is, if I want to spoil the mood in my committee, in the sustainability committee, and the CEO is the chairman, I'm his deputy there, I come with a new pledge and say, hey, we got to sign this. I mean, this is something where you better explain well why you want to sign it, what the effect is, and you don't do it for the gallery. You better have the processes in place. So these are the things, and this will change tremendously. Data isn't there where it should be. By the way, if we reduce our carbon emissions, who on earth knows if the world then emits less carbon? Eventually, we can get very clean if we force all our clients, or we part from our clients who emit carbon and say goodbye. They go to some investor and some bank from China. Coal is now invested by more than 50% of coal investment is financed by Chinese banks. I can tell you,
even we in Europe decided to extend.
Yes, and the question eventually is, how do we manage it down in a smart way? We all want to get to the point that carbon emissions get less and not more. And we need to control this. It needs to be controlled by the governments, by the businesses, It needs to be transparent. And this, by the way, we have announced our 30.8 million tons for our corporate loan portfolio. You can now track it. We will announce an intensity. We will measure the intensity. This will be important. You can track that. This is transparent. So better you have some companies that are transparent on that, and that you have it in the transparent sector and you know what happens, than just saying sell it off, get out of that financing here or there, and just leave that company alone. They will find the money. It is important that we manage it down together. This is why we so strongly believe in transition dialogue.
Yeah. Wow. Damian, you want to chip on that one?
I was just reflecting on the report. So yes, the external environment has changed. Okay, so a CSO has to look at the external environment and say, what does that mean for my internal organization? The internal organization had metrics, it had targets. They're no longer appropriate to the environment we now face ourselves in. So I've got to then use all my influencing skills, my strategy skills, to try and convince all of those other parts of the organization to change. I think, to my mind, the environment that we currently find ourselves in with this sort of Ukraine just demonstrates two other skills that I think a CSO needs that probably didn't come through from the report. One of which is they've got to be incredibly adaptable. Right? We're asking them, the external environment changes virtually overnight. They've got to try and work out what that means. Think about that for the organization, and then work out how do they sell that to all the other organizations, functions within the organization. And the second thing is they've got to be exceptionally resilient. You know, as Jörg said, every time he potentially goes up and vetoes a deal, right? You know, you've got to take that on the chin, knowing you're unpopular, but doing it for the right reasons. I mean, it feels like the role of a CSO is absolutely critically important, but so exceptionally hard.
Yeah, well,
and I think I would like to, because it's so important, and this was also my learning with Luisa Neubauer. We need to explain better what we do. We need to be so transparent. We need to communicate. And here comes back to your question: can you communicate it? It is damn complicated. And you know what? It will become even more complicated. I can tell you, the next weekend I could spend on regulation. I could spend on carbon footprint, on the newest risk report. I could spend on, there's so many angles you have to look at, and we need to explain it. The outside world needs to understand how this is going to work. This whole greenwashing debate, to be honest, that is very much on the surface. If you look really what's happening in companies who take it seriously, it's a lot. You can argue it's not enough. And by the way, worldwide, we can see it's not enough. It's still, the carbon emissions are not going down. And we are losing time. So we need to find ways to get them down. And always to think about that. And this is what we need to explain better. And that was, by the way, my learning with Luisa Neubauer and with Evelina Sham from Uganda. And I find it, by the way, that's also very important. You got to have your eyes and ears out there. Listen to somebody from Uganda speaking about the consequences of climate change.
Yeah.
Then you know what you have to do. I mean, that these are things that this is a huge challenge we are all in. And it's, as I'm not alone in Deutsche Bank, as I have a great team, as we have to connect all over the bank, businesses, politicians, regulators, we all need to connect. This is why Christian Sewing said we need a task force in Europe for this. We need really get into the execution mode, measure it right, get it. We need to follow the right indicators. If we follow the wrong indicators, we all look good, but eventually it hasn't helped. You can have a clean DAX, a clean Dow, a clean FTSE, and the world hasn't become anything any bit cleaner. That is the biggest danger we're facing. So we need to do the things right, and therefore we need to communicate them. This is also by the CSO, and I think, Damian, that is probably one thing. So chief sustainability officers need to be they need to be very communicative. They need to be able to explain what they're doing, and they need to empower other people in the company to speak up. I mean, if I take our people like Victoria Brand, she can explain really what frameworks mean and go into details, or Gerald Podobnik on finance. You need to have these specialists explaining, not only specialists, but explaining, the ambassadors being out there. Claire Coustar from our fixed income and currency business, Trisha Tania from our origination and advisory business in the investment bank. You have all over the bank, we have ambassadors who need to explain, and one person is not enough, but that person, that chief sustainability officer, better be able to communicate well.
Yeah. I've actually just returned last night from a discussion in Nur Sultan with the head of the Ban Ki Foundation, the former UN General Secretary as a foundation, and we've discussed there. And one of the key takeaways was also, if we are not able to make that transition successfully, and I mean successfully in the sense that we are maintaining living standards, we will not be able to serve as an example for the global south to be rehearsed. And there's a decision is going to be made whether we'll have in future, in fact, reduced carbon footprint, because that we still have the growth, and only if they see that the transition can be successful. Is that also something which in a CSO suite is being discussed, particularly being discussed when it comes to global businesses? I mean, will serve as role models as well?
We're definitely thinking a lot about all of these questions. And we need to think, I mean, look, this world is addicted to carbon. The business of this world is addicted to carbon. So, and we need to get away from that addiction. This means huge and fundamental change. This is going to be really such a fundamental, that will change business models. We need to get to a circular economy. Why on earth are we exporting old batteries instead of using them here? And why can we still export plastic into the world and say this counts the same as if it is recycled? We need to come to an economy which is circular, which means fundamental change. Otherwise, we will, and come back to what I said at the beginning, I'm absolutely sure that we will see, or I don't have to be sure, scientists are sure that we will see catastrophes which have warlike implications, and we will have to react on them. So we need all together, and I have a lot of understanding for what Fridays for Future is saying and is demanding. We need to get away from this carbon addiction as soon as possible. On the same time, you may have to just, I mean, and come back to what you said before. Look at our economic minister, Robert Habeck in Germany. Let's close your eyes for a moment and think, okay, a year ago when in the election campaign, he would have gone to Doha and negotiated a gas deal. And he would say, okay, we have to reinvigorate coal. There might be situations where we need to act like this. And this is what Damian also said. You need to be really flexible on these things, not flexible. You have your boundaries, you have your values, but you have to, what is the environment changing? But, and here comes the big but, it's the one thing, if you do something to solve a situation now for the next 12 months, it's another thing if you invest something that may go live in 2030 and will have a life period until 2017, will produce a lot of carbon, and you will say, oh, we find a way to capture it and we will find a way to compensate it. I can only say the best way to get carbon emissions down and out of the atmosphere is not to produce them. Yeah, so we have to find these ways, and then you go to the south, and people are suffering in a way which we have to keep in mind, and we have to be aware of. And we need to be very pragmatic also. Maybe the solution is there and not with us, and maybe the better investment is there and not here. How do we find ways to do these investments? And if you're a chief sustainability officer, and that's the long answer to your question, Hubertus, you will think about these things day and day and night, because this is so in the middle of our lives. And this makes this job, by the way, so fascinating and purposeful, because we all know we need to change. And in this position, you can be one of those ambassadors and drivers of change. And that makes it so fascinating, why you go long hours for all of these topics and the complexity, and try to reduce it and focus wherever you can.
We've got another question from the audience here is, gentlemen, are you looking forward to a separate finance report and a separate sustainability report? Or would you rather advocate an integrated reporting? Damian, probably you want to start.
Yeah, I think, again, Nirvana would obviously be an integrated report. I mean, just going back to what we said before around sort of net zero, that optimization of risk, reward, and carbon all together so you can understand it. So an integrated report makes perfect sense. However, we're not there yet. So why, therefore, would you not have, separate reports on separate topics that that you can then interpret to get a picture as to around what that optimization question would look like? That's my view. Jörg?
I think we get more and more into an integrated reporting, and we have to think a step further, even impact reporting.
Yeah.
Eventually, we are too much still in the phase of we describe what we do, but we are not there yet to say, and this has this and this and this impact on the SDGs, the Sustainable Development Goals, and that is a big challenge. And I think we will move to this stage. This is also something that will be developed, and there again, you need finance, you need experts in developing all of this. So is it integrated at the end? I think the focus on the non-financial report is still a good one. If you now merge it right now, you probably you will have these huge reports at the end. And I think we need to develop the non-financial report further, and we will come to an impact report eventually.
Yeah. Another question from the audience. A mere decade ago, chief sustainability officers was an emerging role with many critics regarding it as greenwashing. Today, the sustainability heads are being appointed at record rates. Do you see that as a positive, as a good development? Damian?
I think absolutely, 100%. Going back to that sort of the pledge analogy, right? Setting a pledge where you can't deliver it is ridiculous, right? So of course, I can see why they'd say that there's potential for greenwashing. The CSS will then put in place for a marketing spin. Where we are now is a lot more, and as Jörg said, it's a lot more around just control, around setting a balanced risk appetite to ensure that the overall organization is thinking about sustainability, is thinking about sustainability strategy, is interpreting it in the organization, but they're doing it in a safe way. They're doing it for the right reasons. They're trying to assess impacts we just talked about. And therefore the CSO is ultimately not only sort of helping to be a visionary, but they're also trying to be a guardian as well for the organization. So I think it has to be seen as a positive that that they are there. They are doing that interpretation. They are thinking about what it means for the organization. They're helping the organization to adapt, but they're making that happen in a balanced way, with the organization clearly understanding and quantifying in some sort of framework what the risks are of that strategy.
And I think it's important, look, everything I can subscribe what Damian said, and I hope I have made clear how complex the task is and how much execution it is behind it. There's no time for, it's not a fluffy function where you have somebody bubbling around a little bit. Then it will fail. Then it's the wrong thing to do. Then better don't have one. Yeah. Yeah. You should only have one if you mean it serious. And all the analogies. If you can afford today not to have a chief sustainability officer, you must be an incredibly flux agile and well-connected company which can identify serious risk problems and financial issues and planning issues right away without any focus on it. And I'm really lacking fantasy how a company with more than 100 people could be that agile and flexible and good in identifying. You run at significant risks, that's a problem. I think people who think still this in this greenwashing category haven't understood what the challenge is.
Yeah.
We are all facing.
Yeah. When we did the survey and we were talking through with certain chief sustainability officers, one conversation sort of resonated with me, which was they said the role of the CSO emerged from sort of an internal corporate social responsibility.
Yeah.
Right? And he said, but actually the role of the CSO now, there's not even a passing resemblance to what that role was before. They just sort of described it as the difference between, the chief technology officer of the organization and HR. They were just so fundamentally different. The role of the CSO is so completely and utterly different. It's almost just not recognizable to what it evolved from, because the environment has changed, the risk processes, the world we live in has changed, expectations have changed, and that's why the CSO is so important.
And I can tell you that I'm really lucky that I had time since 2016 to grow in this role, and for 3 years, it was still that kind of rather function that was impeding things sometimes here and there and saying this is against policy and so on and so on. And you really can dig deep into it, because what Damian's studies shows is you need to know your company and you need to know as many people in these positions and who's doing what. This is extremely important for that function. So it makes sense to have somebody who grew out of the company and who knows the company very, very well. And you need to have somebody who has this facilitator mode eventually. And you can see that in other companies. And when I look at chief sustainability officers who really try to make things possible, it takes time. It takes a lot of time to fill out that role. And the more time you have to prepare for that, the better it is. And one of the things to prepare is know your company.
The next question from the audience changes the perspective completely. It goes on to the investor side. To what extent is it also necessary for the CSO to talk to investors? Where do you see the activism from investors come from? Which way are they going? And how impactful are they for the work of the CSO?
So in the report, we actually asked the question as to what's driving all this change. Is it regulation? Is it strategy? And is it investors? And what they found was that actually it is. This isn't regulation that's causing organizations to want to change in sustainability. It was the investor community and strategy. So that sort of link that was driving all of this. And therefore, does the CSO need to be that point person into the investor community? I think it comes back down to the organizational structure per se. But I do definitely think that the CSO needs to be very, very close to that dialogue, because they need to understand what it is the investors are expecting, so they can go back in and obviously make sure that it can happen. But they also need to sort of explain what the organization is doing, communicating that back out to the investors in a positive but safe way, to that whole sort of greenwashing and risk angle.
And I would say that it has helped tremendously to have investors pushing for it. It has helped tremendously to emancipate the chief sustainability officer role and the importance of it. As soon as you have investors who appear, the one thing is NGOs. Yeah, it's very ugly at AGMs. It can become very ugly. The other thing is when investors start voting against you and with big packages, and you suddenly have, then everybody wakes up. The CEO, the CFO, the whole management board is absolutely on the front foot. So that makes you understand. So, and my answer would be, by the way, you have to talk, as CSO, you have to talk to every stakeholder group. And probably the most important one is internal, the employees, and to mobilize your people. The good thing with the sustainability topic, it's a dinner table topic. And it's very easy to a certain degree to mobilize and get people interested in it, because It's so near to all of us. So that makes it easier, but you have to talk to all stakeholder groups and investors among them. You have your investor relation department, they are running it. Again, it's you need to collaborate. You can't say, oh, this investor dialogue is now with me. Investor relations step aside would be just crazy. And they run that stakeholder group. They are plugged in. They know when they need to get Victoria, me, or who else from my team into this dialogue. They know exactly what is the right way to do.
And do you see some changes here from the investor side recently? I mean, Larry Fink has been very outspoken for a time, but he's sort of, it feels like he's going back a little bit in activism. So what do you see on that side?
I see investors becoming more intelligent, with more intelligence and more knowledge about this. They become better and better and better, and it will get tougher, tougher and tougher. It's absolutely clear. There will be a group of investors. There will be some investors who don't care, but those investors who care, the fund managers who care, the asset managers who care, these dialogues are serious and tough. And there is lots of information they ask us for, and I'm sometimes have the feeling it can be like a little bit too much tick the box, but eventually there is a strong dialogue and intelligence is growing. And with the growing intelligence, the dialogue gets more sophisticated and you better be prepared.
Yeah. Gentlemen, I could keep going on with this fascinating discussion with both of you. It's been absolutely exciting. But our session draws to a close. We have 2 more minutes to go, and I'd like to have one question, because I do know lots of young people. They're very excited about making an impact on that world. How could they go towards, not directly to the CSO function, obviously, but within the CSO departments? What would you advise young people who want to go into that field? Which way to take?
And when you say, sorry, just to clarify the question, when you say which way to take, are you talking about educationally, or what they should try and embrace in their role? What do you think, Hubertus?
Well, people that want to work in organizations to drive that sustainability change, how do they get there? Do they first have to work in other sections before go, or is there a way to prepare, like have a certificate, like a certificate accountant? Or so
I think
what's the way?
I think there's no one size fits all. Obviously, if you have a educational background in sustainability and you can get a job in a sustainability function, and obviously that's a great start. But even if you find yourself in a different function, given what we're talking about here, that ESG is going to be part of the DNA of everything in every single organization, I think even if you find yourself in a finance function, in a procurement function, you can naturally start to enhance your ESG skills, start to think about what it means for your part of the organization, and then build those bridges back to the sustainability function. And given what we've just talked about in terms of if you really want to be, the CSO, build a network, right? Build a network and think about 2 things: your influencing skills. So how do I influence the people, either in my function or across the wider organization, to make the change? And secondly, I think Jörg said this many, many times, and your communication skills. I think if you've got those, if you've got that capability, and it doesn't matter where you sit in an organization, you're just starting out on your journey, I think there's a route that would have sustainability at its heart.
Jörg.
I would thank you. Damian, we agree, I think, on almost everything, or on everything, but combine ESG knowledge in your studies with management knowledge. You need both. But it's very important, I think, today, if you want to go down that track, try to get have that science background on the one hand. It's not a necessity today, probably, but it will help you getting into the sphere. Get management skills and leadership skills and communication skills as soon as possible. So be on stage as early as possible. Try to communicate and create networks. Get used to these things, and never forget about the soft factors. As Damian rightly so said, make your right and your left part of the brain work. Don't trust only the cognitive intelligence, but really the emotional and intelligence plays a big role. Only if you can combine these things, eventually you will probably have the package for that role. And as this role will keep developing further in the next couple of years, it's a high complexity role, but I can imagine that more and more people will like to go into this direction, and they have to think in all of these features.
Expect more applications, Jörg, after that session. So thank you very, very much. We've got a clear sense of urgency. We've got an idea of the complexity, and we've been showing the way forward. Ladies and gentlemen, there is urgency, but I think we can conclude on an optimistic note with that clear passion which we've seen on the way to solving the issues. I think we're on the right track. Thank you very much, gentlemen. Thank you, ladies and gentlemen, and stay tuned.
Thank you.
Bye-bye.